at Emkay Global. He joins us right now on the program. Mr. Karwa, thanks very much. Great to have you with us here on the program.
Good morning.
Just a quick sense on, now that we've kind of gone through the last week and a half of turmoil with this Adani issue, markets have been roiled a little bit, the budget is behind. How are things looking to you from here out in the medium term?
See, I think as we are anticipated also, we expected the markets to be volatile and primarily driven by global flows. And we have seen that in the last 1 month also, almost 25-30,000 crores of FPI selling, which has happened. So I think, and that money has possibly gone in other emerging markets like China, etc. So that has kind of played out to start with. I think now the market will be looking for cues as far as how the domestic flows continue, because now with interest rates being around the 7.5-8%, there is a fear in the ecosystem that domestic investors who have been so resilient so far, there may be some slowdown in anticipation, or because the interest rates are attractive to invest in debt versus equity. So that is something which could be of concern. Now, apart from that, I think it's going to be a hardcore bottoms-up market, and that's the way the market should behave. So rather than looking at it on a top-down basis, investors would do well to look at stocks from a bottoms-up perspective. So if you're looking at from a Sensex perspective or Nifty perspective, I think it continued to be volatile. FPI positioning, etc., seems to be again on the short side only. So unless they turn positive, I think we will continue to be in a range-bound kind of a market with heavy intraday or weekly volatility.
On this entire Adani Group issue, Mr. Karwa, I wanted your thoughts. One, on whether the rest of the market could decouple from the Adani fiasco. And two, what do you do with the stocks per se? I mean, you may not want to comment on individual stocks, but at a time like this, when the group is shrouded with so much controversy, do you stay away entirely, or do you look at some opportunities here?
Yeah, I think 2-3 observations which I would like to make. One is that look at it this way, that this is the first time that global research houses or specialist investors who look to short sell, and now they have looked at Indian markets very closely and have come out with aggressive research reports and also disclosing that they are short, etc. Now, this is something new for Indian corporates, and which will be very interesting going forward also. So wherever there is a whiff of overvaluations or extremely overvaluations with not too much of research, we will possibly always be vulnerable now to global research houses also coming to play in. We have not seen that so far. So that's something which is very interesting and which all of us will have to be cognizant of. Now, as far as investing in various stocks is concerned, I think it is a function of valuations. And if your valuations feel comfortable, then you should look to invest in. But having said that whenever there are sharp corrections in a large cap market or in the large group, I think it's better to be very careful in terms of what are the level 2, level 3 impacts, which could be on the debt market, which could be on regulatory issues, etc. And the news flows can be incremental. So yes, there could be some bounce up, etc. The stocks could stabilize in the group currently, having seen the almost 50% corrections. But for investors, I think they need to be aware that there could be more volatility. So you should be very cognizant of the expected volatility and what kind of actions are there from the regulators and the lenders. I think these are the 2 things that will play out in the next few months. But till then, you need to be very, very careful before investing in any of the stocks.
Okay, all right. Hi, morning, Krishna. Thanks so much for stopping by. Well, what's your take on the 2 pillars of the market, the banks as well as IT? The IT stocks have seen some bit of a pause in line with what's going on with the NASDAQ. While the banks as well, they did see a correction once this entire Adani fiasco did come, to the forefront. What's your view on both these 2?
Yeah, I think as far as IT is concerned, as far as banking is concerned, I think it has been a consensus trade for the local institutions, local investors, as well as the global investors. And last year we saw them outperforming significantly. So currently the situation is that, yes, the workings of most of the banks which have come out, etc., has been very good, very robust. Valuations are also attractive. But despite that, we are not seeing a significant uptick in the stock prices. That I think is a function of over ownership. At the local level, I think almost all domestic funds, etc., are up to their neck in positions or investing. So they are not in a position to invest further despite valuation being attractive. And the second question is, yes, FPI selling, which continues to be unabated. Now, they also own a significant part of these positions in these banks. So we are continuously seeing a selling. From a fundamental perspective, I think credit growth is kind of a given, but I think the challenge that many of the banks are facing is as far as ability to raise deposits. So I think individual banks who are in a stronger position to raise cost-effective deposits, they should possibly do well. So yes, valuations of many of these banks are attractive, but the challenge is on technical fronts because of the over ownership. Now, within the banking system, yes, public sector banks did do well, and then there was this challenges. I think most of the banks have come out with their disclosures on whatever exposures that they have. I think the underwriting standards are very strong across the banking system. So I don't think so that should be a concern for investing in public sector banks also. But my concern remains the same thing, that if the top 1, 2 private banks, if their valuations will decide the benchmark for the valuations of the public sector banks. So that's where the challenge is. As far as IT is concerned, I think the fears were overdone. We saw almost 20-25% correction in the calendar year 22. And rightly now what we have seen is after the quarterly results and maybe some kind of guidances in terms of going forward, the stocks are positive. I think cash flow, etc., remains very strong for these companies. Valuations have also become reasonable. I'm not saying attractive. The big uptick possibly in IT companies could come post the fourth quarter numbers when more guidance will be available in what they foresee for 23-24. But yes, in an uncertain environment, or rather an environment, global environment, which you believe can become much more stabler going forward, then IT companies will possibly make a decent comeback.
Okay, by the way, one of the stocks in focus this morning yet again is Paytm. After the big move yesterday, Paytm is seeing some follow-on buying. It's up 3%. Remember, this is the first time that the EBITDA of the company has moved into the black, which is EBITDA positive of around 30 crores is what they reported this time. And the net loss declined as well. Mr. Karwa, your thoughts on some of these, new age companies, e-commerce companies. Do you think that the path to profitability is now upon them? And if yes, do the valuations look attractive? Paytm, Nykaa, PB Fintech, Delivery?
I think if you see in the last almost 2 quarters now, after the kind of deep correction that many of these companies have gone through, I think the managements have started talking the language which public market investors understand, which is the path to profitability, whether it takes 6 months. Earlier, the question was only about growth, and without focus on profitability. Now, at least they have started talking, and possibly some of them have started delivering also on the path to profitability. So valuations may be challenging for many of them, but at least they are making the right public investors. Sense is that wherever there is a clear leadership in some of the businesses, those businesses and uniqueness of those businesses, those companies will possibly attract more investors. And some of the businesses which can be replicated, there could be a challenge over there. So selectively, it is time to look at these companies.
Okay, all right. We will leave it at that. Thanks a lot for joining in and giving us your view on the market as well as, on what you expect going forward. Well, by the way, the market is very, very quiet.